So afternoon, everybody. My name's David Saunders. I see a couple familiar faces here today. I work for a company called Briter Bridges. We basically map startup and VC ecosystems across emerging markets. Most of the work that we've done to date has been in Africa. We've also recently expanded to Latin America and South Asia. So I've been working at Briter for the last few years. Previous to that, I was based in South Africa, where I worked specifically on financial inclusion, which was really interesting because when I started my career there in the early 2010s, I was doing lots of research on informal financial markets, things like Stokvels, burial societies, savings and loans associations, and nobody was interested. And then about 2015, 2016, all of a sudden we started getting calls from FinTechs and insurtech companies and tech companies that were not just interested in this data for some type of social enterprise, but because they saw a big opportunity and market there. And so I've really seen firsthand over the last 10 to 15 years how technology companies, first with FinTech companies, and then with e-commerce companies, and more recently with companies in the energy space, the agricultural space, really transform markets within Africa. And so this is quite an interesting opportunity here, which I'll be presenting on, is looking back at the last 10 years of data that we have, tracking how that evolution has played out in terms of the product sectors, markets, funding dynamics. And then we'll really be jumping into the last quarter as well, because after being invited to this presentation, we did a quick updating and cleaning of our data to look at how the market has evolved in the last 3 months, 4 months in particular. So yeah, if we click to the next slide here. Oh, and maybe first, the reason you'll see why I'm calling it rational exuberance as well here in a minute, because I think the last 5 years in particular, from the pre-COVID or COVID easy money era to the last few years, we've seen quite a lot of shift in terms of the funding dynamics, not just in Africa, but for VC more generally. So there's 4 points that I want to kind of focus on today. That I want you guys to also, and I don't necessarily know if we have all the answers to these, but I think they're good things for us to provoke and kind of think about to get the discussions later. There's some panels later today as well with some individuals that will know much more than me about how this is affecting the VC financing space and their models. I think there'll also be some startups who can speak a little bit to the type of business models they offer. But then I also wanted to really think about the UK as it relates to Africa as well, because I think there's some unique opportunities for UK investors and UK startups as well that we're seeing. So the first kind of major thing that we have that we want to focus on is are we starting to see a rebound in the funding landscape for startups in Africa? The second thing is it all FinTech? Is there something more than FinTech? The third is really looking at, is Africa a market? And I think over the last 3 years in particular, we've started to see a bit more differentiation. And the last is, where is that kind of UK edge for investors and startups as well? So if we go to the next slide, and we look back at the last 10 years of funding data that we have, you can see that where I got the name for this presentation from was that from about 2015 to 2018, you have momentum building within the VC space in Africa, but you really have this breakout from kind of 2019 to 2022. That's not particularly unique to Africa. You've seen this worldwide as well, but this was really the first VC cycle that we saw or that we've been tracking within the African context. And I call this period from 2019 to 2021 irrational exuberance. And I think everybody had irrational exuberance. Money was cheap. It was flowing into all types of innovators around the world. Valuations were hitting an all-time high. And, to many people, it looked like that was never going to turn around. And then, we come out of COVID. We have the run-in with inflation. Central banks start to change interest rates around the world. Money matters again. And you start to see this correction in the market. And like all ways that we respond to changes in our macro environment, I say there was a bit of rational pessimism where people said, okay, perhaps we had gotten a little bit too excited during this period of, really, really high valuations. I mean, companies that didn't necessarily have revenues yet were getting valuations the equivalent of now what a lot of businesses with really good revenues have. So this is kind of the place that we've come into. And over those last 2 years, what we've seen, and we can show through the data, is a lot of consolidation within the VC landscape in Africa. And that's really been what you've heard about over the last 2 years. There's been companies that have been closing down. There's been VCs that have been struggling to close funds. And there's also been a retreat from certain markets that hadn't yet necessarily proven themselves. If we go to the next slide, and this is why I wanted to spend a little bit of time trying to go back and see what happened in Q1 of this year, because we've seen a lot of deal announcements in the first quarter of this year that seem to indicate that there might be a shift in this landscape. And so here, what I'm comparing for you guys is the first quarter, so January to the end of March, for each year since 2016. And as you can see for 2025, this is the first year since the correction where we've seen an uptick in the volume of funding and the number of deals. And it's interesting, I actually been only in London for a month. I've been in Kenya and South Africa for the last few months as well. And I definitely started to see a change in the type of conversations I was having, the type of discussions having with VCs, startups, the kind of energy and excitement again that we really saw in the 2021-2022 period. And I think there is something that's emerging now that's slightly different than what we've seen over the last 2 years. And I'm calling it a rational exuberance. Because I think in that first period from 2021 to 2022, it was a bit of pray and spray. There's a lot of funding chasing a lot of opportunities. We'll see in a moment here, treating markets very similarly, treating business models very similarly as well, and treating the financing that goes behind that very similarly. Now, I think over the last 2 years, while it's been quite painful, what you've seen is a much greater appreciation for the nuance in investing, not just in Africa, but in different markets in Africa, and in different types of sectors and products as well, and also at different stages. So if we go to the next slide, one of the things that I think we have really seen, over the last few years in particular, is that equity and VC funding is not always the only funding instrument that we need to rely on when supporting startups and innovators within Africa. So in 2021 and 2020 and 2022, you can see that the majority of funding that startups received was equity. Equity can be a fantastic tool. It is not the only tool, and oftentimes with equity, if you give it away too early, you can actually make yourself uninvestable at later stages when you go to raise follow-on funding. Also, equity is not the only instrument that you need to grow your business. If you're an asset-heavy business, if you've got collateral like in a FinTech business, debt can be quite attractive. Also, if the equity market is struggling, you need to look for alternative sources of funding as well. And so we've really seen a growth in terms of debt funding as well within the VC space or within the startup space in Africa. And also another story I wanted to correct a bit here is that everybody thinks of startups in Africa in terms of grant funding and donor funding. I think that's been part of the story that's kind of gone out of Africa over the last few years with, it's not really a commercial business, it's grant funding, it's DFI funding. Now in some instances, that is probably correct. DFIs definitely see startups and innovators as an instrument to achieve different types of outcomes. See a lot of funding going to climate and agriculture, but grant funding makes up a very, very, very small percentage of the overall funding that's going into the continent. Really what we see is a lot of equity, and even if that's backed by DFI, it comes with the strings that it needs to be commercial, and you see increasingly more debt providers coming into it. So I just wanted to kind of shift that narrative a little bit here that it's not all grant funding. It's actually a very, very small amount of it. And if you go to the next slide, what you can see is that the majority of that funding had also been at the very, very early stage. So that's accelerator programs, that's awards and prizes. And we've also seen actually a decrease in that. So following 2020, which is the period around COVID, and yes, donors and DFIs do get very, very excited when an event happens and they get to respond to it using a new policy instrument. They gave out lots and lots of very early stage grants for health and for digitalization. And what we saw in 2023 again, when we had the correction following the end of COVID, we also saw a lot of grant funding at the very, very early stage. But what we've seen over the last few years, particularly as the sector is consolidated, particularly as there's been more commercial pressure, is that funding is actually consolidated more around the growth stage, checks, and later stage. So ticket sizes are very, very different in Africa than Europe. A lot of Series A, pre-Series A types of businesses, we're talking $1 million plus. We're seeing a lot more of those deals, a lot more commercial capital, and particularly in this last quarter, as we've seen the uptick in funding, the uptick in deals, it's been bigger deals, more commercial deals. And we'll look just now into the type of sectors that those are going into as well. I have to remind myself which slide's there. That's why I have to look at them. So this slide right here, which very, very easy to digest, I'm sure for all of you in the back, is a breakdown of the type of sectors that the funding has gone into. So what I tried to do here is use a little bit of color coding to make it easy. So think about these yellow ones at the bottom as your more, nothing's really SaaS in Africa, but your traditional VC businesses, FinTech, AI, data, software, e-commerce. If you look at the green ones, think about it as the way that climate tech is shaping the environment. So this is mobility, e-mobility solutions, clean tech, renewable energies, agriculture and ag tech. And then at the top is health, ed tech, travel and entertainment. But really ed tech and health tech are the ones that I've lumped together there. As you can see, FinTech has really played, attracted the majority of funding and traditional VC type of solutions like e-commerce, software, data, and AI. But over the last few years, you've really seen a big increase in climate tech. And yes, there has been a role that kind of DFIs have played in terms of shaping that as well. But we've also seen more and more commercial capital coming to that as they see the opportunities that are driven by decentralized energy, e-mobility solutions. If you've gone to Nairobi recently, you'll find that if you call up a boda, you get an option for many e-bodas, electric mobility bodas as well. They're fantastic. The boda drivers also prefer them. They don't have to worry about gasoline. So you're seeing an increasing kind of commercial entry point on the back of that concessional funding within the climate tech space as well. And then ed tech and health tech still struggles. And I think something I always tell people is it's very hard to defy gravity. Health and education are challenged industries within Africa to begin with. They're challenged industries in a lot of places within the world. It's very, very hard for you to build viable business models on top of that, whereas finance, for example, is probably one of the most profitable industries, or agriculture, certain segments of it, energy, certain segments of it. It's the most profitable industries in Africa so far. So you can see that funding, startups, opportunity do follow those. And as we've seen a consolidation, you've also seen funding and startups falling back to the things that have already been proven. What's really interesting, though, is if you go to the next slide and you look at within these sectors, because everybody shows you sectors, but they don't show you products, is that this understates how big FinTech is. So if you actually look at the products where more than 60% of funding has gone into, it's payments and transfers, that's obvious. Credit, probably quite obvious as well. Banking, so the FinTech ones. Online retail, B2B commerce, so your kind of marketplaces, your e-commerce companies. Solar, which is about 11%, a lot of that is asset financing. So that's getting you renewable energy solutions, solar panel solutions out into rural areas and creating pay-as-you-go or repayment type of solutions on the back of it. So it's really asset financing. It's similar to what you see as asset financing as its own category. And then if you look at vehicle marketplaces as well, it's really e-commerce. So a lot of what you're seeing in terms of the spillover effects into other sectors are really the continuation of trends that you've already seen in FinTech and marketplaces. So embedded finance, FinTech is really still driving the majority of commercial funding into startups within the startup ecosystem within Africa. I see that we have this white other category, which 40% is not an insignificant amount. And one of the most interesting things that I saw as I was looking at this data before is that in the recent quarter, there's been 2 deals into manufacturing companies in Africa as well. And the manufacturing companies were actually startups that are embedding new types of technologies into plants and things like that as well. So you're seeing this shift. While FinTech has kind of played a really big role, and embedded finance is really enabling a lot of business models in areas like solar and vehicles as well, you still are starting to see some really interesting deep tech or like asset-heavy, pure hardware plays emerging. Artificial intelligence, while it hasn't seen the same attraction as maybe other markets around the world, it's starting. And you're also seeing some really interesting stuff in the deep tech and asset-heavier space. If we go to the next slide. So while we have seen this kind of rebound in funding a bit over this last quarter, while I'm showing you a story around sectors attracting more funding as well, it still is a story of 4 markets. It's not only a story of 4 markets, but they do have the biggest part to play in this. It's Nigeria, it's Egypt, it's Kenya, and it's South Africa. As you can see here, the yellow line, the yellow column is the Big Four, as it's called. The gray one that you can't very well see is the rest of Africa. And so the Big Four has largely attracted between 75% and 80% of all funding into Africa over the last 10 years. There has been some kind of shifts that we've seen. In 2023, we saw a little bit more funding going outside of it. And in this last year as well, first quarter as well, we've seen a few deals outside of it as well. But if we go to the next slide, and I just dig into a couple of these markets as well, the reason it looks like this is because it's the story of one or two big deals. So really the story outside of the Big Four is a story of one or two really big deals, InstaDeep in Tunisia. I'm trying to think of another one that I can do off the top of my head as well. I was going to say Zipline in Rwanda, but that's not really necessarily an African startup. But to a large extent, M-Pharma in Ghana, what you've seen to a large extent is one or two deals have really driven the share of funding that has gone outside of Africa. But what is interesting here again is that I've actually grouped this in terms of colors by region. So the yellow ones are East Africa, the greenish ones are West Africa, and the gray ones are North Africa plus Mauritius. Don't ask about that combination. But what you've seen over the last period is that you've seen big spillover effects from markets like Nigeria, markets like Kenya, not so much Egypt. Egypt actually treats itself quite differently from the rest of North Africa. But really with East Africa and West Africa, and I was recently in Nairobi and I was hosting some focus group discussions with some startups, and that what they were saying is, yeah, Nairobi is actually a great place for you to base yourself, raise funding, and then to enter other markets as well. So you have these kind of regional hubs that have emerged where they are pulling in a lot of funding, but you're also seeing a lot of startups not just be operating in a Kenya or a Nigeria if they're there. They're also operating around those regions, and that's having spillover effects as well. And the second thing that I would say is that a lot of these countries are being very smart about targeting specific sectors. So Ghana has quite favorable health regulations, particularly around digital health, which have allowed them to attract a bit more funding within the health space. Rwanda has really tried to position itself as a place for innovators to come as a sandbox to test their products. You see this a lot in the mobility space. You saw this in Zipline as well. So they can get some of those spillover effects, and then it can go into other markets as well. Mauritius tried to be the Delaware of Africa. I think it's still trying to be that, but a place where you can register your business. You don't necessarily have to operate. And you're also seeing this now in other markets like Tunisia, where they've tried to position themselves as a deep tech market, given the kind of quality of the STEM universities they have. So if you go to the next slide, I think the main interesting bit from this is there is no Africa strategy. While even within the Big Four, they look like they're taking home, for lack of any better term, the lion's share of funding. They're attracting the majority of FinTech funding, but even their FinTech funding is very different. And it's really shaped a lot by the infrastructure and the regulatory environment. So Nigeria, for example, it's payments and transfers. They don't have an M-Pesa the same way that you have in Kenya. So a lot of it has been transfers. Kenya does have M-Pesa, for example. A lot of the FinTechs have been built on the back of that. What you've seen, for example, in South Africa with their Twin Peaks regulation and the allowances of certain new types of banks is they have a lot of digital banks emerging. Time Bank, for example, was one of the really big deals from last year. And then Egypt, interestingly enough, has actually created regulatory sandboxes for buy now, pay later schemes and merchant payments. So really understand your regulation and your policy as you're going into these markets, particularly as finance, because it shapes a lot of what's beneath that FinTech category that looks really helpful. You actually see a lot more below it. Kenya has been the green economy darling. They've attracted more than 60% of all ag tech funding, more than 50% of all renewable energy funding. A lot of it to small scale producers, and very, very supported by favorable policies as well. South Africa and Egypt, countries with strong universities, strong pharmaceutical company links, they've been homes to life sciences and biotech. South Africa's actually had a few life sciences exits to UK companies as well. Nigeria, huge scale. You've seen e-commerce and marketplaces. And then in terms of these second-tier markets, you've seen Tunisia, Rwanda, and Ghana. They're very targeted policies. And actually, Namibia, Dan, did something really interesting this last year. They have a massive ocean, and they attracted they've been trying to build a budding blue tech economy based on it. They attracted a lot of funding into a startup that's doing regenerative kelp forests off the coast. So they're really trying to get creative with how they differentiate themselves, how they leverage policy, how they leverage what they already have to get there. So my main point here is don't think of it as one country, one market, and even if you think about it as one sector, you're going to find more nuance. Next slide, please. And you see this in exits. Exits aren't all FinTech. I think when you see funding volumes, it's always FinTech. But when you actually look at exits, and I'm sure your photos will come up very clear with the colors that I've chosen, so good note for me for another time, you actually see a lot more diversity in the type of companies that have actually generated returns for their investors. If you look at a lot of the big exits, I think MoneyPoint had a very successful exit this year. You've seen Stripe, yeah, they get a lot of the headlines. But you've actually seen a lot in areas like health and biotech, ed tech. You see it in like traditional businesses like ticketing companies, for example. So there's no one story to this, and I think the actual returns show this as well. You can also see that even during kind of a very difficult time over the last few years, there's still liquidity that's coming back into the market. And I was talking to George back there just on the way up in the elevator, and this actually understates performance because we don't report on secondaries in Africa. I don't know necessarily why we don't do that, but when you see a funding round that say $30 million in X company, they probably raised $50 million, and 20 of that went back to early stage investors. So there's a lot more liquidity and a lot more exit activity that's actually happening. Next slide, 10. I'm interested where we go with this after it. Okay, so coming back to the UK, one of the interesting phenomenons, and I think maybe this will resonate with a lot of individuals in this room, is that many startups in Africa aren't domiciled in Africa. They domicile outside of Africa, particularly where they get to a stage where they're looking to raise foreign funding. So the two biggest markets for this are the United States and the United Kingdom. The US is one of the biggest markets for companies domiciling anywhere. A big part of this is it's actually not just a VC trick. If you get funding from the Gates Foundation, it's typically channeled through somebody like Mercy Corps, which is based in the US, so if anything happens, they can take them to court. So a lot of this is just protecting the investors on their side. This is what makes them more comfortable. They know the rule of laws in those markets. So oftentimes they'll require you, as part of you receiving funding, to actually come and domicile within those markets. More and more companies are doing this earlier and earlier, but most of the companies do this once they actually get towards valuation and they get to a Series A type of stage. If we go to the next slide, we can see that the type of companies that are domiciling in the UK aren't only FinTech companies either. While they definitely attracted the majority of funding, we've seen clean tech companies. I'll show you a couple ag tech companies here in a moment. As I was saying, we've seen some health and biotech companies from South Africa. And then actually InstaDeep was registered in the UK as well, in London. So you see quite, in terms of the dominance of FinTech that we showed at the beginning, if you just look at the type of companies that are getting to a certain stage, domiciling in the UK, you also see a bit more diversity. And I think you would also agree that these resonate with a lot of the strengths of the local UK ecosystem as well. If we go to the next slide. So here are some of the examples of these companies that I'd be talking about as well. So World Remit, very, very famous remittance provider, domiciled within the UK, actually started from some angel funding from London Business School, or LSE. You also have some interesting companies which aren't just domiciled in the UK, but have kind of de-risked their technology in the UK, and then have actually raised funding here to go back into Africa. So Ox Delivers has a really interesting e-mobility company. I think that they have developed a specific type of trucks that are basically e-mobility trucks that have rolled out in East Africa. You have a company like Downforce Technologies, where the technology for soil health testing was de-risked at Oxford University or Cambridge, and then has looked at raising funding to enter Kenya as a market to offer their services. You've also seen companies that have left Africa and come back to the UK as well. So you have a really interesting dynamic corridor that's happening between the UK and Africa, not just on the investor side, but on the startup side too. I'm like, what's the next slide going to be? And here's a couple very specific examples. I would want to make one very important point here. You don't see a lot of FinTech companies on that list. Or the FinTech companies you do see on that list are mostly doing cross-border payments. Because actually, the most competitive market for a foreign startup to enter in Africa is the FinTech market. It's very saturated, it's very well developed, there's great products, there's great solutions. I mean, to be completely honest, in South Africa, for example, you have fantastic financial services solutions. I don't need necessarily another company from abroad coming in to offer it to me. Maybe Kenyans feel the same way. But you know what there's not a lot of innovation with? Ag techs, climate tech companies. The reason for that is the R&D period for some of this really like deep tech stuff is not the thing that a lot of funders are looking to invest in Africa. So what you've actually seen is a lot of those technologies being transferred into Africa, either by themselves. So if you think about all the renewable energy funding, it's tech transfer from China. It's basically PVCs being imported, finding a business model within Kenya, within Nigeria. You're increasingly now seeing it beyond that, also being the company itself. So Ox Delivers, they basically built the e-mobility truck as a service model. Flybox has done some really interesting things with black soldier flies, Down2Force Technologies with soil health and carbon measurement solutions. They de-risk the technology here, they de-risk the business model. They then go raise a lot of funding abroad in order to then enter, say, Kenya, enter other markets within the continent. World Remit found a very specific niche, cross-border payments. Obviously, the majority of their market for that is outside of Africa because it's remitting back home. So let's see what the next slide is. This was supposed to come before. This was just to show you where the majority of companies are. So a lot of the companies that come from Africa, they're headquartered in Kenya, they're headquartered in Nigeria, headquartered in South Africa. I mean, you can see that there's a dynamic here with the language and kind of historical ties as well. So just to kind of wrap up as well, I think the first thing I want to say is there's been a very difficult few years over the last year for VCs and startups alike. I'm not necessarily calling the bottom, but the first quarter of this year has looked different than the first quarter of the last 2 years. It's showing a slightly different trend, and you're also seeing this in the dynamics of funding, more commercial funding, more growth stage deals, and this is on the back of a lot of noise in the global geopolitical environment as well. FinTech is still taking the lion's share. There has been some bets on climate tech, some early bets on AI. I also think this even underestimates how many bets can still be taken in FinTech, embedded finance, and locking other sectors and locking other solutions as well. Strategies are geographic, but they're also sectoral. As you could see before, not every company is actually attracting the same type of funding, even when they are attracting it. You're also seeing this in the Big Four as well. And actually, the UK has a pretty interesting position there, given the markets that are attracting the majority of funding, as well as looking at the type of sectors and products in those markets. And I think there's beginning to be a bit of a playbook for UK investors and UK and startups that are looking at Africa as well. And yeah, I think we'll be interested to see how the rest of the year goes. And I hope, Kiara, if you're still here at the Tech Festival in South Africa later this year, we haven't seen a complete correction to this, and I'm not calling myself irrationally exuberant, but I'm pretty optimistic for what 2025 can look like. Thanks so much.